Administratively, I just wanted to let everybody know that this is being recorded, just so that you guys know. I don't believe that you guys will show up, but in case you guys are concerned about, having your guys' faces put on our YouTube, feel free to turn off your cameras. We won't be offended, we promise. But just so that you're aware, sorry, I'm just adding a couple people in here. Okay, so today we have a couple things that we're going to go over. We're going to talk about the CEBA loan. We're going to talk about an update to the queues. We have some information about the CRB, and then also the new rent subsidy program that's coming out. Like I said, if you have any questions during the whole process, please feel free to ask us any questions. But we will have a little bit of time at the end to talk about some questions if you have any. And then the last thing is we'll talk a little bit about something we're looking at is some valuation services. But just to dive in, sorry, actually inviting some more people into the chat. I'm just going to share some information here. I'm going to bring up my screen. Okay. Okay.
Perfect. So I want to start with the CEBA loan. Now, for the individuals that don't know what the CEBA loan is, it's a $40,000 interest-free loan that you receive from the government. It's actually administered by the banks. So you actually apply through your bank. And the way it works is you get a $40,000 loan. As long as you paid back by December 31st, 2022, you get $10,000 forgiven. Now, there has been changes since we last spoke about this. They've actually extended the application deadline to December 31st, 2020. So for the individuals or business owners that didn't get a chance to apply the first time, there is still hope. And the second thing they've done with this is they've extended the loan from $40,000 to $60,000. And for that extra $20,000, there's a $10,000 of that can be forgiven. So a total forgivable portion of about $20,000. Now, this should be a refresher for most individuals, but if there's someone that hasn't heard about the CEBA loan, there's two streams that you would apply through. The first one is you need at least $20,000 of payroll. And if that doesn't qualify, and that's off your T4, that wouldn't qualify, then you have to show at least $40,000 in non-deferrable expenses. The turnaround time is about 3 weeks once you submit those documents, but sometimes there can be delays if the documents you provided are not clear or they don't show the document. So we always recommend that when you are applying for this, always have those documents in hand and ready to go in PDF format, of course. So when you are uploading it to CRA online, you can make that process a little bit smoother.
Yeah, sure. Actually, we have a question about the CEBA loan. It says, with regards to CEBA the CEBA $40,000 loan, can you touch base on what happens when a business is sold and there's a share sale? That's a great question. So we've had a couple actually instances where we've dealt with this. The loan is actually attached to the business itself. So as long as the business maintains operations and there's an attestation that says that you won't close your doors, you won't wind up your company or anything like that. Sorry, admitting some people. That you can still have that $40,000 loan. So effectively, that loan is tied to the corporation, and it is okay in this business sale. We just want to make sure that the business still continues. Now, you do have to remember that when you sign the CEBA loan, you personally attest to the maintenance of the business, the continuation of opening in the foreseeable future. So there is some legal side to it, which obviously we're not legal experts, but it is something you may want to consult legal counsel on regarding what the effects of that attestation are on you as a person if you're to sell your business. Sorry, we have another question. If you have the $40,000 loan already, can you, and if so, how do you get the increase to $60,000? That's a really good question. That $60,000, the extra $20,000 is going to be a new application. If you already qualified for the 40, you are basically in the clear to get the extra 20, though you will have to sign an additional attestation once that application portal comes open. That basically says that you attest to using the extra 20 for the purposes that the CEBA is intended for, and that you continue to keep your business open. Okay. Okay, and I think that's all the questions for this for now. We do have some more SIBA questions coming through, but I think we'll save them closer to the end so that we can kind of have a little bit more flow. But if I don't get your question, feel free to ask it again. So the next section we're going to be talking about is the CEWS update. Okay, so the CEWS, the 75% wage subsidy, which I'm sure everyone's pretty familiar with, is the wage subsidy that you get on the amount of eligible remuneration paid to your employees based on your revenue decline. There's been some significant changes over the past periods, from periods 5 all the way through what we just wrapped up was period number 8. And now again, released as of October 14th, we see another update that's going to change periods 9 and 10 and potentially periods going into 2021. So the biggest change is that the government has committed to the CEWS up to June 2021, which is great, which effectively adds about 6 more periods to the whole application process, which is awesome. That's a lot of subsidy that is available. Sorry, adding some more people in here. Having said that, remembering that any period from 1 to 10 has an application deadline of January 31st, 2021. So if you haven't actually looked into your calculations at all, it's a good idea to take a look, depending on the size of your company and what your revenue streams are. It can take some substantial time to get all the records straight and get all the documentation needed to make the calculations. So if you haven't looked at it at all, or you're not sure if you qualify, we highly encourage you guys to take a look. It's a great program. Lots of people are getting a benefit. It's definitely something that you should look into. Okay, so having said that, the subsidy is going to change, not that it's been completely released yet, but for periods 9 and 10, which the applications are not open yet, but for periods 9 and 10, we see that in that one column it says before, period 9 had a subsidy multiplier of 0.4, which basically means that your revenue decline times 0.4 is your Q's rate, or how much your subsidy would be based on the eligible remuneration paid to your employees. And then in period 10, that number goes down to 0.2. So that was actually quite a small amount of subsidy, and we saw a huge drop off for how much people were going to get. And the government basically said, we want to increase that subsidy. And so based on the backgrounder, they're going to be maintaining the same multiple that they used in period 8, which is 0.8 for periods 9 and 10, and potentially even the ones that are come in 2021. So what that basically means is originally they were going to slowly remove the subsidy, but they've said, not enough has been handed out to our businesses in Canada. So we're going to increase that subsidy rate up to 0.8. Having said that, the second piece of this is the top-up subsidy. Now, the top-up was the average of the previous 3 months of revenue decline. So let's say we're looking at application period number 8, it would be looking at the average decline of 5, 6, and 7 in comparison to whatever your baseline is. And any amount in excess of 50% would be qualified for the top-up. Now, this was it didn't produce as great of results as they had anticipated. And so they're switching it to either being that average calculation or the current month's revenue decline. So this is going to open up a lot more responsiveness to businesses' revenue declines on a month-to-month basis, which will basically allow employers who are experiencing a significant decline in any one particular month to qualify for more benefit. So that's kind of all there is on the CEWS. It is a complex calculation, and periods 5 all the way through 10 have gotten increasingly more complex. So we really encourage you to take a look, as it does take a little bit of time. Preet, do you have any comments on this?
Yeah, just one comment. So in the past, before the changes, the way the CEWS work is you had to show a decline of at least 30% to get the maximum. The way it works now is any decline will get you the CEWS subsidy. As Eric mentioned, the higher decline you have, the more you're going to get. So what the takeaway from that is, if you have experienced any financial decline in your revenues, you will qualify for the CEWS if you had it previously.
Perfect. And handing it over back to Preet.
Perfect. So I know majority of our participants are business owners. So, but I do get questioned on this a lot. So I did want to take a couple of minutes and just talk about the individual assistance that's available. And that's starting with the Canada Recovery Benefit. So what the Canada Recovery Benefit is set out to do is if support individuals who are not entitled to EI. So what that means is you first should apply for EI, and if EI does not, for whatever reason, does not work out for you, or you do not qualify for it, then the CRB is available for you. In order for you to get the maximum amount, anything over 38,000, you will have to reimburse 50% of it. So essentially, you are kind of, up to 38,000, you'll get the full CRB. Anything over 38,000, you will start to repay that CERB once, unless it's all paid off. Now, the way it works, you receive $1,000 for a 2-week period, so that's $900 after taxes, and you are eligible for up to 13 eligibility periods, so 26 weeks. So really, up to September 25th, 2021, this program is available if you are experience hardship on the individual level. The $38,000 limit resets on January 1st, 2021. So let's say you are hit over 38,000 in 2020, you are start at zero on January 1st, and the $38,000 does not include the CRB. The next program that's available is the Canada Recovery Sickness Benefit. This one's only available for 2 weeks, and it's for individuals who are affected due to COVID and cannot go to work. Now, the one takeaway from this is if you are receiving paid sick leave or benefits from your employer, you cannot combine this with the CRSB with that. So it's only if you aren't getting any of those benefits from your employer. And the last thing I just touch a base on is the Canada Recovery Caregiver Benefit, which is a $500 per week, up to 26 weeks per household for workers who are forced to take care of family members for reasons related to COVID. And the big takeaway from that is it's per household. So if someone in the house is already applying for that, you cannot double dip. So as long as if one person applies for one period, another person can apply for the second one, but you just per household, you can't simultaneously apply for that benefit. Anything to add on that, Eric, before we jump to the next category? Is there any questions on that?
No, we don't have any questions on that. I do see some questions coming through about other things, but we'll address them at the end. Nope, I didn't have anything to say about the CRB or any of your related programs.
Perfect. Just one quick point on that. If you have some complicated, because if you look at the eligibility criteria, sometimes it's in the gray. So if you think there is a reason that you might qualify, but you don't know if you should apply, we're open to chat it out and see if it is worth applying. With everything, if it's in the gray, you can either ask the CRB line and get a proper answer from them, or we can look at the risk of applying and see if it is worth applying.
Sure, definitely. The last thing that we're going to go through today, before we dive into some questions and some other things, is the Canada Emergency Rent Subsidy. Okay, so this program is fairly new, but if you're very familiar with the emergency wage subsidy, you're going to be familiar with the whole structuring of this program specifically. Now, the first program the first period that you can apply for is period number 8 of the CEWS benefit, which runs September 27 to October 24. That's the first period that is going to be available for the CERS. And then it follows exactly the same thing as the CEWS period. So we have period 8, 9, and 10 available currently scheduled for the CERS. The rates are pretty much very similar to the way that the CWS is structured. You have a base rate that gets you up to 65% based on a revenue decline on your baseline and your periods and stuff like that we'll go through. Then you have a top-up rate up to 25%. Now, this is highly dependent on whether or not your business was required to close, which we'll talk about, to a maximum total rate of 90%, which is a huge benefit. 90% on your rent expense that can be subsidized. There are some obvious criteria there, but we'll go through all of that. Now, to talk about the calculation, the base rate is your revenue decline up to 50%, up to a 50% decline is multiplied by 0.8, and then added to any revenue decline over 50%, that is multiplied by 1.25. That gets you your entire total base rent subsidy. And then on top of that, you get a top up if you were required to close for by public health order. Now, interestingly enough, as of last night, there were some restrictions that were placed on some businesses, particularly your sports organizers and stuff like that. But let's assume that you maybe run a sports facility and you're required to close. This might be a great opportunity there to use that 25% top up and apply, because it's a benefit that you normally wouldn't get otherwise. Now, what is the revenue decline basically that comes as a part of the rates? The revenue decline is exactly the way that the wage subsidy is being calculated. So for period 8, it's October 2020 versus your baseline, and your baseline being either the same month in 2019 or it's the average of January and February 2020. And that runs the same for periods 9 and 10 being November and December. And so those revenue decline percentages are then used in that base rate and top up calculation to determine how much, what your rent subsidy percentage is that you can put towards your rental expense. Now, the maximum amount of rental expense that you can actually have is $75,000 per location to a total of $300,000 amongst all affiliated entities. With that, what is a eligible rental expense? The eligible rental expenses have to be, things like commercial rent, your property taxes, property insurance, or interest on commercial mortgages. Now, if you're familiar with the CEBA, similar documentation, similar styling to what they're going to be asking for what is an eligible expense, except if you had a residential mortgage or residential rent and you operate out of a residential home, unfortunately, the CRA has indicated that these will not qualify for the subsidy. Now, with all of that said, in order to qualify the expenses, they would like to see, just like the CEBA, a specific time period for the expenses that you are going to be using as your expense calculation. Now, they have to have existed prior to October 9th as a part of an agreement. So your agreement could be starting as of January 1st, or even in the previous year or 2 years ago, that talk about, your property taxes, your property insurance that you're required to pay as a part of your rental agreement. And they have to continue after those agreements as well. So as long as you can prove that, you have an agreement, you have to pay those expenses as a part of this agreement, then they qualify for the subsidy towards the calculation. And all of those eligible expenses put together, multiplied by that rate that we just talked about, will get you the amount of subsidy that you'll be eligible for. So I personally think that this is going to be a great program, just like the wage subsidy. I think that there's a lot of opportunity here as long as you have the appropriate documentation. And the biggest thing here is documentation is key. Just like all the other programs that we've seen, CRA has been cracking down quite heavily on the types of documentation you're required to keep for these subsidy programs. And I highly anticipate it's going to be very similar in this case. So as long as you have your documentation, I don't see why there should be any issue with getting this subsidy. The last thing that I wanted to talk about before we jump into questions is, with all these programs, obviously we can tell that the economy is struggling. The economy is struggling. People are having a difficult time, but there is a silver lining. Now is a great time to look at your corporate structure if you have multiple businesses, or if you're looking for family planning or future planning, or looking to take advantage of estate taxes and reductions and such. So valuations and corporate reorgs are a huge part of what we can do in a time like this for future planning. Now, I don't want to get into it too much. We're going to be releasing a newsletter in the next week or so that's going to touch on kind of the concepts that I just mentioned. But if you're interested in any valuation services to get an idea of, cleaning up your corporate structure or anything like that, future tax planning, take a look at that newsletter, or feel free to reach out to Preet or myself or even John, and we can, have a discussion around that stuff. Okay, so with that said, I know I've left quite a few questions here, but let's just start from where we left off. We have a question that says that I understand that holding companies are now eligible for SEBA. What are the criteria that needs to be met in order for a holding company to qualify for the 60K? Also, if a corp owned by said holding company has already taken SEBA, can the holding company take an additional 60? That's a really good question. So the SEBA loan, each business number is eligible for a SEBA loan, independent of all other businesses that you own. So for every corporation that you have, as long as they on their own meet the criteria to qualify for the SEBA, they are eligible to have one. So if you have 6 companies, they all meet the criteria, they all can get one. So holding company, if a holding company has either the payroll or if it has the eligible expenses, they qualify. I think that the best way to look at it is, remembering that the eligible expenses are not just anything related to rent. It's also including regularly scheduled debt. I know a lot of holding companies do hold debt for their whole corporate group and such like that. So if you have your agreements and you have all the information regarding that corporate or your loans, then you should qualify for the 40 and the 60. I hope that answers your question on that. The next question we have is, there's a question about any decline for periods 9 to 10, but not previous periods for the Qs. The question's pertaining to Preet's comment about how if you have any revenue decline, you qualify for the Qs subsidy. It's actually starting from period number 5 that you can qualify for that any revenue decline. Although periods 5 and 6 were transitional periods, which basically allowed you to use either the old 30% decline method or the new Qs 2.0 method, which allows you to experience any revenue decline and qualify for any amount of subsidy. So periods 5 and 6, 7, 8, 9, and 10 all allow you to qualify in any amount of decline, if that kind of answers your question. So 5 all the way through 10 have that criteria, although 5 and 6, generally, if you qualify for the old method, that is a bigger maximum than you would experience if you use the new method. We have another question. It says, does storage rental / charges qualify for the rent subsidy? That's a great question. To be quite honest, the subsidy program isn't out yet. And I haven't seen anything regarding storage rentals or charges, but I believe that they're specifically targeting your building of operation. Preet, do you have any thoughts?
Yeah, just reiterate, because I might be on Zoom. Right. Yeah, just to reiterate that. Yeah, like the details aren't out, but from the looks of it, it looks like it's for tenants that haven't been able to pay, or tenants that have had a decline, and not to do with any storage or rental charges.
Sure. Okay, it says, if you have one good rebound month where you don't qualify for the Qs, does that preclude you from qualifying again in future months if revenue declines again? That's actually a really great question. And we actually get it quite often. And the answer is no. The question is with respect to the Qs benefit as to whether or not, if you had a good month, if you would just basically not qualify anymore for any future periods. And the answer is no. You do qualify. If in one month you had a really great month, you had a huge revenue incline, not a decline, that month obviously would not qualify. But in the next month, you can actually reapply if you had a terrible month the following period. They're not, I guess, they're mutually exclusive in the sense that, like, if one was a great month and one was a bad month, the great month has no bearing on the bad month. That's not to be confused with the safe harbor rule, which allows you to, or the deeming rule, the deeming rule, which allows you to use the revenue decline of the previous month in the current month. If you had a worse month last month, and that creates a better subsidy rate than the decline in the current month, the previous months can be used for your subsidy calculation. It doesn't work in the opposite, where if you had a great month before and you had a bad month this time, the previous one applies. So I hope that kind of answers your question. Other than that, I don't think I had any, and I don't think there's any other questions unless, anybody has anything they'd like to say or anything like that. General comments, I think that it's going to be these are great programs. Definitely look into them.
Hey, Eric.
Hey, Preet.
Yeah, I just want to add to that. We are practicing all social distancing at our office. Eric and I could have sat next to each other for more than 15 minutes, but I chose to do this in my own office. So we are keeping ourselves safe and hopefully keeping you safe as well.
Exactly. Actually, there is one more question as we're here, Preet. Is there a start of business date required for CEBA eligibility? More specifically, can we set up a new holding company? Yeah, that's a great question. You had to have had a business open prior to March 1st. The business number had to have existed prior to then in order to qualify. So if you're looking to open one up now, unfortunately, it won't qualify. And yeah, that's actually a great question. The last one is, will this be posted on our YouTube channel? Definitely, for sure. All of our coffee chats are available on YouTube on our YouTube channel. So if you go to our website, I believe there's a link there that lets you see all the past chats where we kind of go into detail on all the different programs from the CEBA, the Qs, even the old 10% wage subsidy, the whole thing as they came out. So if you're looking to watch all those, you can go on our website. Or if you're more of a reader, we actually update our website, our COVID page on our website as well, that has all the same resources, just in a readable version. But other than that, if nobody else has any questions, I think actually, more questions. To confirm, the additional 20K is eligible for an additional 10K for a forgivable loan. Yeah, Preet,
that is exactly it. It's an additional 10K. Now, the information hasn't come out yet, but there is talks that you do need to show a revenue decline for that additional 20K top up. So when information is available, we'll update our website on that. But just to answer your question for now, for that the 20K, 10K will be forgivable.
Yeah. Your second question is for a total of 20K of forgivable loan. Yes. Okay. I'll give it a couple of minutes here since I've said goodbye 6 times. And seems like the longest goodbye.
We don't want to leave, right?
Yeah, exactly.
Well, thank you for everyone that came. As mentioned, we're always here. So if there wasn't anything that wasn't answered here, please don't hesitate to reach out to us. Our emails are listed on our website. Have a great weekend, everyone. Stay safe out there, and we'll see you again.
All right. Thanks, guys.
Thanks, guys.
Thanks, Kev.